Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is April 8th, 2024. In the Kickstart video, I take a look at three major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar. So let's get started. We'll start with the euro versus US dollar. Take a look at the hourly chart. Not a lot going on here in this currency pair to start the new trading week. If you look at the chart, there's lots of ups and downs, and those ups and downs have taken the price above and below the 200-day moving average. That level comes in at 1.08311, and we're just trading just above that level right now. On the downside, we did hold pretty well the 38.2% retracement of this move to the downside. That's a close support level. Also in play is the 100-hour moving average. Those levels come in at 1.0821 and 1.08168. If we start to move below those levels, we did on Friday after the jobs report, but the momentum could not be sustained, and we also fell below this swing area. But if we move back below that 100-hour moving average and we stay below that level, we look toward this swing area on the downside between 1.0795 and 1.08036, so above and below the 108 level. Also within that level is the 200-hour moving average. That's a green line in this chart, which comes in at 1.0801. So that's going to be, this area down here is going to be a key level, not only today but going forward this week for all the reasons cited. Now on the top side, if we do continue to stay above the 100-day moving average, we need to get and stay above the 50% midpoint of that same move to the downside from this high right here. This is a March high to the March low. That level comes in at 1.08522. Get above that level and we start to look toward the 100-day moving average. That's this blue line right here. That level comes in at 1.08713. I have this other line right here, which is defined by a number of different, both swing highs and swing lows. A swing high right here, moved above it there, and failed, and then started to use this level as support through here. And then we started to use it both as a support and resistance through here. Most recently, it's been used as a resistance level, including last Thursday before we broke up to the upside, broke above the 100-day moving average, and then failed miserably and moved back to the downside. So 1.0865, 1.0871 is other key targets on the top side. So if I were to say like key levels this week, it's right up here and right down here, and in between we have the moving averages through here. So that's the euro versus US dollar. Let's next take a look at the dollar versus yen, and again we'll look at the hourly chart. And what we see in trading last week, and I did this in my weekend report, I guess, is that lots of price action here. We found support in the lower end where we needed to find support at this swing area between 150.71 and 150.88. It goes back in time, but this is part of this ceiling. There's other ceiling levels going back here in this yellow area right through here. And for the most part, since we broke above it, we just had one little move where the price fell below that level for about 5, 6, 7 hours, but then rotated back to the upside since then. Have been staying above that level, and the level held last week at the lows, or last Friday, I should say, at the lows in the Asian session. We since rounded all the way to the highs of this area, and that high comes in at 151.96. The high price today came in at 151.94, just 2 pips away from that level. We are just we are currently trading 87, just 9 pips away from the that high at 96.7. By the way, that high price is also the highest level going back 30 years. We have a 2022 high, which came in at 94. We have a 2023 high, which came in at 91. The 2024 high came in at 96.7. And like I said, we're just a few pips away from that level, so we need to get above that level. And then we're trading at 30-year highs for the dollar versus yen. So be aware, be prepared. If the price does move lower, we do need to get below the 100 and 200-hour moving averages. They come in at 151.59, 151.50 to tilt the short-term bias back to the downside and have traders looking toward the low end of the swing area. Finally, let's take a look at the sterling versus US dollar, and we'll look at the 4-hour chart for this currency pair. And we look, we have our swing area, or our value area, I should say, that comes between the 94 level, 125.94 and 128 on the top side. We trade, we traded above and below it, but most of the price action has been in this red box right here. with the lower of the swing area between 125.94 and 126.13. As you can see, the low price in trading here today, this 4-hour chart, came in right near the high of that swing area, so buyers are trying to stay in control, but we do need to get above these moving averages on the top side. In trading last week, the high price came up to the 200 bar moving average on the 4-hour chart and found resistance sellers against that level. It starts with the 100 bar moving average, and we have the 100-day moving average and 38.2% retracement of this last move to the downside, followed by the 200 bar moving average. All those levels are the progression to increase bullish bias for the sterling versus US dollar, get above all those levels, and that tilts the bias more to the upside. We start to look toward the highs of this value area. Absent that, and the sellers are still more in control, but we need to get below the 125.94 level, and then the 200-day moving average at 125.864 to increase the bearish bias. Then we'll look toward the low price from last week at 125.38. So there you have it. A look at 3 of the major currency pairs to start your trading day and week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.